Good morning, everyone. This is Manoj. I'm here, and the reason why I come to you today to uh, you know share my views on what I see on Nifty and how it is important that you understand what's happening and take trading decisions based on that information. So today is the 8th of April, early morning, 8:30. I come out with this video to share what I think can happen today, and hopefully, if you understand what I'm trying to convey to you, that'll help you in your trading and help you not make the wrong decisions and not get carried away by what we're going to see. So what is happening is that the GIF Nifty is indicating to us that it's going to go up, gap up, and open around 22,680. Nifty futures closed yesterday at 22,264 actually, and we are opening up at 22,682 at the current point of time, which is approximately more than 400 points higher than what we closed yesterday at. Now, yes, this is a good bounce, but what happened actually was that in the Sunday video, I'd already mentioned, if you have not seen it, I'll share the link in the end of this video. I'd already mentioned that we could see this reaction down, and this would be an extreme reaction, which is not in sync with whatever is happening. And the realization will dawn at some point in time that we are going to be affected by tariffs, but it's not going to be so huge. And we will revert back to a mean after having reacted to an extreme. So that's what's happening today with this move. Now, again, why is it opening at the level that we're seeing it is going to open? So if you see, this is the line that I've drawn here, and you see 22,671. This is a significant line because this is just above the swing highs of the last two levels that where we broke out from to get this rally back up to 23,900. This is the point where we broke out from, and this area where we have where we have an intermediate high and we have an intermediate low is called the fair value area. Now, obviously, you this is something that is a concept that I teach, but if for the people who know about this concept will understand what I mean. But for people who don't understand, we use this concept to identify an area where price decides to come, and this is an area where some equilibrium was found between the buyers and the sellers, and there was a fair exchange of buys and sells, and then the market moved on because the bulls took charge of the market. But everybody got a chance to trade in this area, the bulls and the bears. Everybody got a chance to trade in this area. That's why it's called a fair value area. Once we move up the area, and when we come back into the area, the chances that we will seek liquidity again, and the liquidity will rest under the swing low. So once you are back into this area from the high of the fair value area, you will generally travel to the bottom of the fair value area is where you will find the liquidity. So that's what happened in yesterday's price action. We came down, we absorbed this liquidity, and we moved back up. Prices always move from one liquidity area to the next liquidity area. So now where is the next liquidity area that the prices will want to move to? The next liquidity area is above these swing highs, and that's the reason you see this this rectangle there. This is the next liquidity area, and we are opening right there. Now there are two things that can happen once you reach this liquidity area. One is you go and get into this liquidity area, and then you grab the liquidity here again, and you're again peter down to come to some kind of a move within this fair value area for the day. The other thing that can happen, now this would be a scenario which would give us a sideways action. So I would, give it a yellow hue. But the other thing that can happen is that we can go higher and then use this liquidity to propel further up. Now this is the possibility too. And when this happens, this is called a liquidity run, right? This is when we break out from a particular area. Is when we break out, we call it a liquidity run. But when we come back into the area from where the prices came to that particular area, then it's called a liquidity grab. So these are the two scenarios that can happen. So when the price spends some time above this threshold of 22,671 on the Nifty futures chart, let the price spend some time in this area and then decide for yourself whether the price is going to go up or down. Look for some sustained moves above these levels or below these levels, and then make your next move. Today is a good day to trade because you will have volatility, plus you have these markers to give you an idea as to where the price can go, from where to where the price can go. According to my reading, this is going to be the inflection point, which will tell you which way the direction the market is going to take. With that said, I'll end the video here. This is a small communication that can help you decide which direction the trade can go and how you can identify that direction by finding where the prices are spending time after they tag this area of 22,671. It's a very simple plan. Uh, Please execute it with what I'm trying to inform you, and you will definitely gain from this information. Thank you, and look forward to being with you for more such videos. Thanks a lot.